Hey everybody, let's go ahead and get started just with a quick update. I'll go over the ES futures and we'll start scanning for a couple setups. I know, well, let's just go ahead and start with the ES futures. So let's go ahead and get started. 19 points up. We got very close to our target of 40.73. And so far, this is a nice rounding bottom that we have here. This is not an inside and up formation though. So from a daily perspective, I'm a little weary of the formation, if you will. We'll break it down, see if we can look at, like a 4 hour, 2 hour, and so forth, and see what we're contending with. Earlier, I went ahead and drew you some levels based off of smaller time frames. I want to say that was on a 30-minute, a 4 hour, and so far, it looks like those levels are holding. So today, what happened? I mean, if you look at it from this perspective, you can see that the ES futures they drop below the PMZ. It was a nice little short, if you will, into the trendy edge. So again, the edges, the PMZ, everything that we go over as far as setup goes, you'll notice that the edges are support. So that's the thing. It's almost like if you hear traders say, supply turns to demand or demand turns to supply, you'll hear that. The idea is you'll go ahead and see that these edges, if you will also do the same exact thing. So when we're above an edge and price is moving back down into that level, we look for it to go bid. So overall, these banners that I have up here, these are really important. These are letting you know my Fibonacci. Okay, so from my Fibonacci that I teach you right here in the room, this just makes it easy for me. Instead of having to go through several different charts and measure with Fibonacci, this is already doing that for you. And according to my methodology, that's where you're getting this from. Okay, so the monthly is bullish, the weekly is bullish. And so again, I don't need to go back and look at that. All right. Notice right now we're just kind of bumping up against the bottom of that PMZ. Let's go to a 5 minute chart really quick. All right, so there's the 5 minute chart. You can see the PMZ. Okay. So every time we kind of push up into it, it is resistance for right now. On a 5 minute chart, it's rounding just a tad, but what's most important, and again, I hear some of you guys in here taking these trades from the levels, and that's amazing. So again, the line in the sand and the trendy edge right here acting as support until it's not. Below that at 40.20 is our next support level, and above again the PMZ is the only thing that's really getting in the way for this bullish trend to basically break out again on the day. And the pattern just keeps following the same, right? Every day it's kind of like sluggish, and then bulls end up winning that entire race. And if you come back to the daily, it makes sense, right? We came down into our trigger longs this week right here. Market pushed up. It never once closed below the 200 simple moving average this week. Matter of fact, if anything, it just kind of came back and tested it, and now is showing you that there is support. So again, there's support right here in this level. All right. And you can also see if we zoom in here, we had a trendy edge. So again, this happened on Thursday. So when the masses were concerned, right? And I don't doubt that if you didn't have levels or you're new to trading, you don't have a process, it's okay. I get it. Most people freak out as prices pull back, but what you want to be looking for again are levels, and especially when they're synergistic. Synergistic meaning they come together. So you have this 200 SMA, you have the trendy edge here, and if you were to throw some Fibonacci's on here, I would go from here into this pivot because this was beforehand, and you could see that was the 618 of that rally. So three different reasons why I put the trigger longs here, and three different reasons why we're moving up from here is the way I look at it. When you're able to stack those probabilities of using different sorts of indicators, whether it be supply and demand, whether it be Fibonacci's, whether it's exponential moving averages and so forth, when you have something that comes together, they're usually really powerful. Okay, and that's what you're starting to see here. So the cloud is just a visual representation of trend, if you will. Okay, and when price is above this cloud, if indeed it comes back to that level, we want to look for support. That's what's happening in the market. Now, when I take this daily, I'm going to click here and I'm going to go to a 4 hour. So when you start to, I guess, doubt yourself, or there's some self doubt that creeps in, and you're thinking to yourself, like, damn, this is getting unreal. This is getting euphoric. And every time I get here, I get smashed. Take yourself to the next time frame, and I want you to use the same exact methodology that I'm teaching you. So here we are once again, we have a cloud. The price points are different, but again, we're looking at a smaller time frame. If you look down and to the left, I showed you this morning, the entire zone, if you will, technically is right here. And notice that price came into that zone. The trendy edge was there. We went over that several times. So this is the thing that I love about trendy edges. And I'm not trying to be biased about my system, but the zone, technically, this is how you draw it. This is how I learned many, many years ago. The issue was I never knew how deep it was going to come in. I never knew when it would turn around. And I didn't really have a process around that. So the old me would take the trade right here, and the old me would probably get stopped out right in here. Okay. So now we just teach patience, folks. Teach patience. Like, you don't have to be in a rush. You just got to wait for it to come into a level. And that's the whole idea. If you could just tell yourself, hey, write it right here in your journal. I will not execute a trade until it gets to my level. And then from there, again, you know what your risk is. We've already assessed how to do that. You execute the trade. And then from there, there's only two things that can happen. You either hit your targets or you get stopped out. Okay? One of the two. So notice here on the 4 hour, we're coming in. As long as this cloud continues to hold, the 4 hour trend is intact. Okay? The daily trend is intact. And so this is how we break it down. All right? And if you're not good with this risk, for example, if I were to tell you, hey, stay long as long as the price of the 4 hour candle can close in or above this cloud, well, you'd be looking at this going, hey, we're at 4,053. You're telling me I need a 50-point stop. Well, yes, from a 4 hour perspective. But we can always make that time frame a lot smaller and reduce that risk. But I need you to understand the bigger picture is really what's been playing out for us this entire month. When others were trying to call a top, we're just trying to ride the trend. Okay. Now, at some point, this trend will break down. And what I'm trying to tell you is, believe it or not, we can assess that very quickly. We could start with a 30-minute. And I want you to look at this 30-minute chart. Again, we're riding above the cloud. We're going from green to white to green. The PMZ is still resistance. But notice here, you can see the cloud. Okay. Now, what happens when price starts to break down below this cloud? Boom, that trend on the 30-minute starts to look a little bit differently. And then we back ourselves up and we come over here and look at the 4. And if the 4 is inside the cloud, then we come over to the daily and we notice that the daily is testing the cloud. It all depends on your basically how you want to be in this trade. Do you want to be in it for a long term, right? And the biggest mistake that I see is that a lot of traders, right, they watch this develop, right? They wait for too much confirmation and they tend to get in at the top, honestly, and they get stopped out at the bottom. And in hindsight, it looks pretty easy, right? You're like, well, I'll buy the bottoms and I'll sell the tops. But if you're not trading supply and demand, I will, with confidence say that most of you get stopped out. You have to be able to identify these levels. You have to see the proof of concept over and over and over. Then you start to build a little confidence. And in order for you to get to a state of really wanting to learn, is unfortunately you have to lose a lot. You have to lose. You have to understand that what you're doing is not working. And then basically you hit rock bottom. And then you start learning that, hey, I want to actually learn how to read this stuff. I want to understand how to execute it. And that's typically where I find traders. They come here, they're looking for an education system, something that's more mechanical and not really relying on other people to take trades for you. Although we do have our alerts here that are linked to our API accounts that come to you within milliseconds in the Discord room. I have to say, this is for proof of concept, right? I don't encourage just alert following, although I know people will end up doing something like that. This is an education based system. something that we can use over and over and over. Okay? So just want to make sure before I start that you guys all understand that. This is just here to show you that I'm a transparent trader. What I say I'm getting in, I actually get in, and my API lets you know that. Okay. All right, let's go ahead and move forward. So overall, the trend continues to move up here. And you can see, once again, we're trying to move up towards this little pocket of supply. We have tested it before. Because we have tested it before, makes me feel like we're probably going to break it at some point to the upside. Okay. If we break it, what I'll tell you are these levels up here where it says resistance and like this white line at 4073. I need to see that, Friday or the weekly candle can actually close above this. And speaking of the weekly candle, okay, what have I said from the get-go? This is the bigger picture. This is an inside and up formation, and this keeps us long. That's it, folks. No news, no blogs, no person on Twitter. Nothing is keeping me from leaving this bullish trend based off of anything else except for what I'm teaching. Prices above the cloud, prices creating the inside and up. The TTM squeeze down here, we have these trendy bluish bars on the histogram. Everything is telling me to stay long. And for people that feel like they're feeling the pain because they're short, I have to take you back to this chart and go, where's the big move? Where's the big move? You think this is a big move? This one's hurting everybody? Just this little tiny move here? And really, the bigger move, if things really wanted to heat up and you really wanted to feel some pain, if you're being biased, okay, you're hurting yourself. If you come into the market and you're like, well, my thesis is overall, here in America, everything's inflated and we will go into a recession and everybody's going to feel the pain. If you wake up every morning saying stuff like that to yourself, you're going to have a hard time executing trades. Maybe day trading wouldn't be for you. Instead, come into the market very unbiased, have an open mind, have a mechanical process that you can take over and over and over. So this inside and up formation says stay long. We're above the cloud. It's getting tight. There are big names coming up to report. And another thing, like I keep saying, try not to short the market into earnings, okay? Especially after the market's been down here for most of 2022, okay? All right, so we're coming into resistance, sure, up and to the left. The only thing I see for our supply is all the way here at 4,224. I would imagine if the market could move there, that would be pretty painful if you continued to try and short it. Now, where does my thesis change? Like I said, 30-minute, 4-hour, things start going underneath the cloud. Then you start to protect yourself, okay? Just want to make sure we're clear on that as well. All right, so going through today, we had some great trades. I'll talk about those really quick. I won't go through all the different charts, but you can see that we opened up here in Amazon, Tesla, and so forth. This was yesterday. We added into Amazon. We trimmed right before the close. Each one of these alerts are pretty cool because they tell you. I don't need to write it in. It's a trim. The blue means trim. Green means we entered a trade. Okay. And then red means we either stopped or closed the trade. Okay. Right here, you can see we closed Tesla for 227% positive. You can see here on Amazon, I trimmed at 192, trimmed again at 197, and then closed at 238% for the win. XLY, you can see Melissa here had a nice gain of 68% in this particular trade. And then moving on down, you can see I finally closed my square. I had tons of trims yesterday, but finally ended up closing out this trade. I figured, we're up almost, I think it was like 2.5 or something like that. So I decided to go ahead and jump out of that. Also, SPX this morning, I went short the futures, and then I turned around, I bought SPX credit. I bought back the short side, then I sold the long side. We did really, really well. The second thing, Melissa got into Google here. You can see she trimmed out at 20%. Market kind of was messing around with people this morning. And then quickly that got stopped out at break even. Great, great management. Love to see that. And then here we got some Apple. Looks like Melissa got into some Apple here with a weekly expiration of 144. And as this picks up, I see that Apple's picking up as well. The only thing is, it's kind of a burn premium type of day. It's Theta Thursday after a big move up. Hopefully, we'll get some performance out of that if we could take out the ES high. The next thing is Microsoft. So I did a Microsoft trade out there, and I gave it, pushed it out there to Twitter so you could see it. I do what's called debit spreads on both sides. We ended up making money on the upside and the downside, so that was nice. And then over here on Tesla, this is the last trade that I took. It is currently, it's a butterfly. Okay, it's a 155, 150, 145 put. Disclaimer, I'm a huge bull in this, but I'd like to see a reversion back to a little bit of demand, which is really not that far away. The current trade right now is down about 20%. Giving it a little bit of room, see how the day shakes out. Other than that, I'm primarily cash besides my 2023 hedge. I have some SPY puts that expire in about 140 days out, and that's in case of, everything that's telling me to stay bullish. If the market somehow humbles me or anybody out there, I feel protected. So again, have a little bit of a hedge on, and then I'm trying to square myself up to be ready for next week. So each week, it's been a good week. I don't want to get over my skis here, as my buddy Ben would say. I'm happy. I'm happy with the performance. Will there be possibly, some things that take off and you feel like, oh man, I should have been in that? Maybe, but I don't care. I feel like as you mature, you take your wins, you take your losses the same, and you learn to fight another day in the market. So it's been a great week. I want to keep it that way. And so I want to trade and be ready mentally for Monday morning. Now, we are 2 for 2 on earnings this week. And again, I trade both sides and I use supply and demand, and then I identify supply and demand. Okay. So, how do I want to go about doing this? So, I was thinking about Visa, but then I looked at, usually I don't do this beforehand, but I looked at the market makers to see what they thought, and they were thinking like a $6 move. Before I did that, I looked at the weekly charts and I came up with some levels that I felt were, basically in play. So that was 210 by 205 to the downside, and to the upside was 245 by 252. But then again, I looked at the Analyze tab on Thinkorswim, and it said market makers are pricing in about a $6 move. And I said to myself, that's boring. That's like really boring. And then this wick, I don't know where this came from. I don't know. Let me see. Let me just make sure of something. Let me go back to the day. This could just be, did this actually push up here? Did this happen? Let's see. I'm not seeing anywhere where that actually happened. I don't know if this is a misprint. Can anybody answer that? That was the New York Stock Exchange mistake thing. Well, what is really interesting about this is I just now investigated this candle, and some of you guys are saying it looks like it was a mistake. This is not common on Thinkorswim, so I usually see this on cheaper type of platforms. But what is interesting is those wicks came right into our levels. If we go further into the weekly, you'll see, I teach this right here, the inside and down formation, it wicked right into there. Interesting, right? And then if you take this a little bit lower, you see that it came into my weekly inside and up. So are these the levels we're contending with and the market makers are severely off? I don't know. I mean, I don't think so, right? I don't think so. But there's a possibility that they're wrong. They're wrong a lot. And that's where we want to take advantage of things. Now, when I'm moving through here, I'm seeing a rounding bottom, and I like to look at the technical analysis without thinking about earnings too much. What would I do if this was just a Monday and we're opening up and we didn't have earnings this week? How would I trade this? Well, I'm looking at it And again, it's holding my weekly support levels. It's resisting around my daily supply levels. And so it's doing what it's supposed to do. The daily is holding the cloud. I want to ask myself, is this thing overextended? No. It moved up, it consolidated in a bullish channel, and it's came back today to test that bullish channel. And if I were taking this trade and had no idea about earnings, I actually would be bullish from a daily perspective, and I'd be looking for 228. Okay. Now that's only, about $3.50 from here. Market makers are saying six. That would only put us up here around 231 or so. Okay. So like right in this area. Once again, my approach has been to protect with debit spreads to the downside, okay? And then longer term, because the market seems bullish right now, I'm buying debit call spreads. Now, the reason why I did Tesla for tomorrow's expiration and it worked out so well is because honestly, I just guessed. I guessed not on my actual numbers. I guessed that we would have some good volatility in the name because that is what Tesla is all about. So I didn't want to buy too much time on it. I figured I would get what I needed in 2 days. Okay. On Visa, I'm a little torn. Again, if I come over here and look at the weekly, it's been in a channel for quite some time. Okay. It's making now higher lows, but we're still, let's see here. We still have, it's just a sideways trend in my opinion. Okay. Just a sideways trend. When I'm looking at the histogram down here on the squeeze, we have plenty of bars to the upside. It feels like it's a little worn out. This might be, I don't know if I'm putting a trade on this, but this might be the one trade where I'd actually think about an iron condor. And I don't like trading iron condors during earnings because it's just it's silly a lot of times unless you're selling way out of the money. The market can humble you really quick. You'll look over at the analyze tab. You'll be like, oh, Visa, the market makers are saying $6. I'll go ahead and sell some calls and puts around that. And then this thing goes up 3x and then you know, what you are then, right? So we just like leave it alone for my sakes. I'm just going to leave this trade alone for right now. I'll come back to it. But my overall sentiment on Visa is that it's a long term, and I would put debit spread to protect it short term. Far as like what I'm looking at is that your support is around 218, right? So I would say, let me look at their options really quick. Let's just kind of price this out. This is what we did with the last two. And just to make sure you guys can hear me, right? Yeah, Melissa, you guys can hear me, right? So Visa, let's go to tomorrow's expiration. Let's just say on the put side, let me make sure. 218. They got these things in increments of 2.5, so or 3.5. Let me see. 2.5. 218. Yeah, I mean, I would buy if I were going to do this. I'm not telling you guys to do this. I'd buy the 220 by 217 and a half. Those are still, I like to get them around 30 to 40 cents. If I were to buy one of these for 60, it pays me 190. Okay. So it's not a bad return. So think about this for a minute. So again, if I were to buy the 220 by 217, okay, and I need to write this down real quick. 220 on the put side, 220 by 217. It's roughly 60 cents. Let's just say that. And it pays 190. So not bad, right? And the reason why I do this, folks, in case you're first time you're listening to me, is because I just don't like to buy at the monies and take a guess. I try to buy my levels, and I much rather risk a very small amount for a nice return. So again, that would be my put side. And then on the call side, I would actually buy time, probably like seriously 17 February. Okay. So 17 February, 22 days out, I would aim up here to 240 by 245, somewhere in there. And actually, we could probably go closer. let's do, let me just look here for a minute. 235 by, yeah, 235 by 237. You can make them wider if you wanted to. You could do like a 235 by 240. That's almost $1, but we want to keep, I want to at least keep the total risk under $1, right? That means combining the put debits and the call debits and keeping it under $1. And one side has to pay for the other. So on this side, the 235 by 237, okay, is 52 cents. Right now, you probably get in about 55. This pays out $198. All right. So if I could get this for $1 and say the put debits pay out, then I've already paid for this trade almost, and I still make 100%. I'll go back in, depending on what side hits, I'll buy back the short side and then ride that. All right. So that's the fun part about doing this. In a perfect world, let me draw it out so you can understand. This would be, again, my put debits. So I'd buy this, sell this. And then long term, I would buy about right here. Okay. And then I would sell the trendy edge right there. And so my setup would look like this. All right. In a perfect world, we'd get the pullback into Friday. I get full payment, right? I'll just round up. I'll make about $2. Okay. The full price of both of these cost me $1. So I've already made my money. When it pulls back to here, what happens are these calls right here, they drop so much, right? They drop a lot. And then I'm watching that. And if that's still under my full risk, I'll buy it back. And then I have 3 weeks for it to play out. So what happens is that what you're looking at is Visa drops into demand, it shakes people out, and because the overall trend is bullish, it rides back up here, and then we pay for that or sorry, not pay for it. We cash out of that, and you end up winning both ways. We just did that on Microsoft. Okay, so that's one way that I like to approach it. And again, what I'd like to see on a day like this where we're down 30 cents and the market's up about 25, I'd like to see I would much rather it come down a little bit more and then I'd buy the call side, and if it spikes up into the close, then I buy the put side. So it's kind of at a dead even though. You know what I'm saying? It really is kind of at a dead even right now. You can see both sides of the strikes are about 50 something cents. But I'll look a little bit later. That's my plan if I end up taking it, just so that you guys understand. Okay. All right. So let's do a little bit of scanning. We'll talk about some of this tonight. But remember, this is what the edge scan is for. So the edge scan is basically a playing field of supply and demand. And so right now the market's moving up. I would actually be looking at upper edges, right? See how it says a U in here? That lets me know that these are, coming into upper edges. So I want to be cautious. Okay. So for example, here's Hilton, right? HLT. Let's take a look at it. It's coming into an upper edge. It's been on a nice move. And because of that, I assess it for a potential short. Okay. Look at this. Right away, this right here is telling me, hey, probably coming into a little bit of supply here. You can see that supply right there. All right. So what would have me get short here? Let me go ahead and tell you really quick. There's a process to this. This is just the first part. The second part is going, okay, let's assess it. Yeah, it's kind of extended from the cloud, from the edges. It's doing its thing. We do have earnings coming up. Does it look like something like this all the way into earnings? I doubt it. But so how much do I get to a return on the downside? Is it worth shorting? That's the next question. So if I think it's a short, what I do is just come over here and I click right here on my 4 hour and I go, okay, there's a high here. We're inside. We're not able to make a new high. And this would be the second step. And then the third step is I come over to a 5-minute chart and I have to wait and be patient. And tomorrow I would short underneath the PMZ. Basically, that's how I do this. and we'll go over that again tonight. So that's how I view these edge scans. Okay. So again, these edges are finding supply and demand on different time frames. Um, we'll look and talk about that a little bit more tonight. And if you guys signed up, we'll see you tonight. I'm not going to talk too much because I always talk a lot. So just kind of do a little intro, talk about some of our setups, and then of course you guys know Melissa will be sharing her success and her strategy around the trendy methodology and her success. All right. So if there's a big change in the market, I'll come in here, swoop in before the close. But if not, don't expect me to jump back on. We'll see you tonight. Um, Happy trading. Till then.